Hello and welcome back to my channel. Today we are going to look at the third and final case of stage 1 in the 2025 Financial Modeling World Cup called Advanced Fabricating Machinery, or AFM Enterprises. Now, what participants were tasked to do in this case was to create a full 3-statement financial model. These 3 statements include the profit and loss statement, otherwise known as the income statement, the balance sheet, and finally the cash flow statement. Now, these 3 statements all work together to show the overall health of the company and to where all the money is going and things like that. We have 25 questions to answer today, so quite a lot to go on here. Now, before I start this case, I have a few disclosures I want to make. Number 1, I am not a financial modeler. I simply play one on the internet. So do expect a lot of mistakes as I'm going throughout the case. There might be some words I'm misinterpreting or some numbers I'm not mathing correctly, whatever. Number 2, this is not my first look at the case. I actually first attempted this case and completed it about 2 or 3 weeks ago. If this were my first attempt at the case, this video would likely be much longer and much worse to watch. My goal here for myself is to keep practicing my Excel skills, my financial modeling skills, and to complete a case. And for you watching, I hope that you are able to watch and learn from this video and take it as a kind of a walkthrough through the case. I also have the instructions of the case here. What I'm going to do for the financial modeling side is, I think a lot of the professional players use the case instructions as their guide. I'm going to try to do the same, although there may be parts where I get kind of stuck, and then at that point I might go and let the questions guide my model. We'll just see how it goes. But let's get this case going. Let's see if I can complete it, and let's see if I don't make too many major boo-boos. Here we go. So first thing I'm going to do is I'm going to set up my model. We see it's a 5-year model. It's an annual model. We have templates here on the statements tab. So I'm just going to simply extend that tab. So I'm going to create my 2005 to 2025 to 2029 model on this same worksheet. I thought about highlighting the columns, but then in the end I decided not to do that. Now, the sales part of this model is going to be pretty straightforward. So we know that this company sells to 3 different industries. You have your retail industry, corporate industry, and industrial industry. We have the 2024 numbers. We also have the growth rates in both the number of units and the price of the units. So what I'm going to do is I'm going to create a little working section here on this sheet, and I'm going to go ahead and do those calculations for those sales. So you see on the assumptions sheet, we have the data for 2024. I'm going to bring that data over to my model, and then I'm going to use the calculations to go ahead and extend beyond 2024. So in part 2 of the sales, we see that we are currently working with the base case, but there's also a growth case and a worst case scenario. And those numbers actually aren't on the assumptions tab. So what I'm going to do is I'm going to go ahead and manually input these numbers in the assumption tab, and then later I will go ahead and refer to them once we get to part 2. Now, another way that one could do this is you could create a drop-down menu, and then selecting the value on that drop-down menu would then replace the values in your assumption sheet. That's much more flexible and probably could work better. Thinking of time, I just decided to do it this way and input the data manually. Now the next part, while I do have my sales information here, there is a capacity constraint. The company can only build and sell 1 billion units per year. And there is a hierarchy as to who they're going to sell them to. So now what I'm going to do is first I'm going to find what's my total sales for each of these, and I'm going to adjust my sales volume so that no single year goes beyond 1 billion units or 1,000 million units as they're being shown in this case. So one thing I had to do is I did have to take out my dynamic arrays, which is fine. This is not a really large model, so that's not going to affect too much. I'm just going to have to put in all of these formulas manually. So you see here I start with the industrial. I use a min statement and say don't go beyond 1,000 million units. For the corporate level, I'm going to do the same. When you add the industrial units with the corporate units, then don't go beyond the 1,000, or the 1,000 minus the industrial units, as I have it here in this formula. And then I'll do the same thing with retail. So take the number of units for corporate and industrial, subtract that, but then whatever combined number, don't go beyond 1,000. Now, see, doing that, you see the total sales volume for 2028 and 2029 is exactly at 1,000, which is the limit. That's what we want to see. So now I have the total sales revenue for all of the years. I'm going to go ahead and bring that information down into my profit and loss statement. Now let's cover the costs. So we see the direct costs are broken down into 3 categories: the cost of materials, the cost of direct labor, and the energy costs. So those are on a per unit basis. So I'm going to first calculate how much of these we're going to have to consider, considering the number of units that we manufactured over the years. And then I can include the fixed costs, which are on a period basis, so they remain the same every year. no matter how many units we manufacture. There's also an inflation index, so I'm going to bring that inflation index in. For the base case, that is a 3% inflation index, so I'm going to highlight that on my assumption sheet. For the growth and worst case scenarios, that inflation index is going to change, so I will also include that into the assumption sheet. Now, this is why it's always important to link back to your assumption sheet rather than manually putting in the number. That way, when your assumptions change, then your model automatically adjusts with it. Now we go to the working capital. And the way that working capital is calculated is all of the current assets and liabilities are expressed as a number of days of a certain figure. So for example, accounts receivable are 45 days of sales. So that means over the year, we have so many number of days. So we can break that annual sales number down into a daily sales amount and then multiply that by the number of days according to the calculation to then find out how much our accounts receivable balance should be. Now you see here what I've done so far is I've actually wrote them as all a number of days of sales, which actually isn't the case. Fortunately, I caught that, so I'm going back and editing it to say it's a number of days of cost of goods sold for inventory, prepaid expenses, and accounts payable. Now what you see here is I'm also working on the 2024 year. That can help me check my numbers later, but I forgot to put the number of days in the year. So just to keep it simple, I just know how many days, so I just manually type that in. Did I type that in wrong? There's a good chance I typed that in wrong. No, I did it right. Okay, don't put that in the video. Now that I have those figures calculated, I'm going to go ahead and put them down into the balance sheet in the corresponding rows. The only information that we don't have at this point is cash, and that's because cash is going to be calculated as we do our statement of cash flows, which we haven't got to quite yet. Now we go on to CAPEX and Depreciation. CAPEX is short for capital expenditures, and those are the big investments into the building. We're talking investing in the property, building the plant, the major equipment that's going to be used, and those are handled differently than your day-to-day costs. So now we are going to add in a field for depreciation. So we're going to depreciate the current major assets that we have, but then we're also going to purchase new assets over the years, and that's going to be depreciated under a different schedule. So first I'm going to start with my template here. So my starting value for the PP&E, and then whatever the depreciation should be. So we know that they're going to depreciate over 7 years. So every year we are going to take 1/7 of that original amount out. Subtracting that will then get us our ending balance, which then we can bring into next year's calculation. Now we're going to do the same thing with our intangible assets. So with intangible assets, the process is called amortization, but the process is basically the same. Intangible assets are 15-year period for the current assets, and there are no new intangible assets. So we don't have to worry about those kinds of purchases during the model. Now we can do the same for the new property, plant, and equipment assets, which are going to be depreciated over a period of 10 years. And every year they're going to spend the equivalent of $250 million. So that's going to change based on the inflation from year to year. Now you see I'm changing this 7 to go back to my assumption sheet. I don't expect this number to change, but it's always good practice that if the number is listed as an assumption, that we link it back so that if we have to change that assumption, once again, it'll be easy to change the entire model accordingly. You see here, I'm doing a lot of work on the top of the sheet. I basically made the top of the sheet as my working papers, so I'm just going to do all of my work up here just to kind of keep it clear and simple. So for PP&E, we are going to depreciate it over 10 years. We're also going to use the mid-year convention. So any assets that were purchased in the current year, we're only going to depreciate half of that amount. Basically, the assumption is we made the purchases over the year, so some of it we haven't used as long as others. So 1/2 is going to be the about average amount, average length of time that we've used this equipment. Now we get on to the debt section. So in this section, we have three different types of loans to calculate. We have the senior loan, we have a variable rate subordinate loan, and then we also have a revolving line of credit. Now that third one is only going to be a factor in part 2, but I can start creating my template to figure out these loans now. So I'm going to start with modeling the senior loan. I'm going to go through the same model for the subordinate loan, and then I believe I'm going to create that template for the revolving line of credit, but I don't quite put the information in yet. Now here's a key thing. Principal payments happen regularly throughout the year. Therefore, the interest has to be calculated against the average loan balance, not just the starting loan balance. That's going to change how much the actual interest expense on these loans is. Now, what gets tricky with this variable rate subordinate loan is the fact that it's a variable rate loan. The interest amount is going to change from year to year. So I had to find the interest amount for each year, add 3%, and then use that for the interest for the loan. So you'll see as we move on, that interest rate is going to fluctuate quite a lot. So you see here, I did decide to start off modeling the revolving line of credit, but I don't need to completely model it because I don't know how much my drawdowns are actually going to be. So I'm just basically setting up the template for now, and then later when I get to the part 2 questions, I will fill it in. Now we get to our equity part. So we have preferred equity, which is a new thing for this company during this model. So nothing for preferred equity is currently listed in the financial statements. So that's going to be something that I'm going to have to add myself. Now, before I get to modeling the equity, what you see I'm doing now is I'm taking some of the information from my working sheets and bringing it down to the profit and loss statement. Basically, whatever that I've been able to calculate so far I can bring it in, so I'm going to go ahead and take care of some of that. So you see here, for the preferred equity, we are once again going to use the half-year convention. So in 2026, when we raise this equity, we are only going to pay $5 million in dividends. For the remaining years, we are going to pay $10 million. For me, for ease of use, I've just split these up into two separate rows, and I'm going to add them together here at the bottom. Now I'm going to create a similar section for the common equity. Now the main difference here is that there was no new equity raised, so I don't have to figure that in. There's also an extraordinary dividend they paid in 2026, so I'm going to have to factor that into my model as well. So the distributions is going to be 50% of the net income available after the distributions to the preferred equity. So my formula here is going to simply take net income minus preferred equity dividends or distributions, and then 50% of the remaining amount is going to be the normal distributions for the common equity. Now the final section is going to be the taxes section. So we see that their normal taxes are going to be 20% of earnings before tax, and a portion of that is going to be paid next year. So that's going to be added as a deferred income tax, as a liability to be paid later. So now you see we're going to start filling in information from the balance sheet. Most of the information that we don't have filled in so far, we can fill that in. So I'm going to take whatever data I can from my working papers and bring that down. So now you see in this balance sheet, I don't have any information on preferred shares because preferred shares hasn't happened yet. So I'm going to have to add that part in manually. Now, dividends are taken away from retained earnings. So to calculate the next year's retained earnings, I'm going to take the previous year's retained earnings, add in the net income, take out the dividends. That should give me the final number. Now here we have a line that we can check our total assets. And you see here that my numbers are not equating to zero. They should equate to zero because this number is basically checking the problem. Assets equals liabilities plus equity. So if everything checks out right, it should be zero, but it's not. That's going to start worrying me. I will work back later and see if I can fix that. But now let's go ahead and start adding in information for our cash flow statement. So once again, I'm just going to follow the model that's already provided and fill in the numbers from the years that I have modeled. Now I'm stuck on this changes in net working capital, so what I'm going to do is I'm going to start answering the questions and see how far I can get. I will do this from time to time as a strategy just to kind of get my mind off of things, focused on something else, so that later I can come back and it's a little bit more refreshed and I can complete the model. Now, this question sheet is something that I made manually. I made it for the purposes of my YouTube video. Hopefully through this you can see the questions that we were asked, and as I put my answers in, I then check the box for the corresponding answer, and that's how I know if I got the answer correct or not. Now see, I'm noticing that my number is not matching up with the number that I was given, so I'm going to see if I can figure out why. Going back, checking different parts of my model, making sure everything makes sense. I'm going to go ahead and take out the dynamic array that I put in earlier, just to see that if I do this manually, will the numbers come out differently. Still has not, so I'm going to continue with my debugging. Now here I'm noticing that my sales volume isn't actually increasing from year to year. That for corporate in particular, from 2025 to 2029, the numbers stay exactly the same. I know that's not actually the case. It should be changing. So I'm going to re-enter this formula to see if I can get it to come up to the correct figures. Now those sales figures have changed. My answer to number 4 does match one of the answers. I can confidently select that and move on. Now, once again on Word, I have a number for question 15 that is very different from the options that I've given. So I'm going to go ahead and take a look at my interest rate calculations and see what could have gone wrong here. Now you see what I'm doing is as I'm highlighting, I can move my mouse over these numbers in Excel, and this will tell me the result of that part of the calculation. It's a little bit like taking the formula step by step and figuring out what is the calculation or what is the result of the calculation from those steps. Now you see that I've got an answer that it does match my options, so I'm going to select that confidently and move on. Now we get to the part 2 section of this case, and part 2 is now going to involve the various scenarios. So before I start answering those questions, I'm going to go back and see if I can now fill in the rest of my cash flow statement that I wasn't confident before I started taking on the questions. Now, since in this case there was no intangible asset purchase and there was no asset dispositions, I'm going to go ahead and put in 0 for those lines in the statement of cash flows. Now you see once again here, I have information for common stock, but I don't have information for preferred stock. So I'm going to do a little trick here and use a substitute function to add a couple of lines for the preferred stock, following the same structure as the common stock. Now see here, when I try to figure out my closing cash, some of the closing cash amounts are negative, which I know can't be right, because in the base case, we don't need that third loan yet. So I need to find out why this is going into the negative because I haven't done my net working capital calculations yet. Let's try to add those in now. Now, because of the way that I did this net working capital formula, I can actually go back and fill it back to the previous years. This will help me check my formula so that I can apply it then to the future years. If this number matches the number in my statement below, then that tells me that my formula should be correct, and I can continue using that for the rest of the case. Now that I add in the total cash from operations, I go down and I see that my total cash values are all positive, so that's a great sign. Now here I'm looking once again, and my check figure is still not zero. So I'm starting to look for a little bit to see why that could be. Maybe there's something that I missed in my calculations. Now, since nothing is really standing out to me at the moment, I'm going to go ahead and complete some more questions to see if the answers line up with the options that they give me. So I look at the cash balance that is not lining up with any of these answers. So I need to take a closer look and figure out what has happened. I'm going back and checking my working capital calculations, make sure I've got the right formula in for those. Still have not identified where my problem is. So this is the trick with these very advanced models. There's a lot going on in them. And if you do something wrong but then continue without noticing, then it's going to be really hard to go back and find it. Now I'm sure some of you at this point are screaming at your YouTube video, telling me exactly what's wrong. I so wish I could hear you right now. So I know everything up to my retained earnings should be correct because I was able to get the answer for that retained earnings. So that tells me my profit and loss statement should be fine. So perhaps there's something within this cash flow statement that's just not quite working the way it should. So now I believe I may have found it. Now see, the line says the disbursement and repayment for these loans. I actually included the interest amount for those loans, which is a totally different thing. So I need to go back and actually mark it as the repayment of those loans. Now I'm checking the others to make sure that they actually line up to where they should. And let's see what our ending cash balance is. Let's see if that matches one of the answers on this screen, which it does. Now we can go on to the questions about the different scenarios. This check figure is still not calculating to 0, but I figure, hey, if my questions are calculating right, I'm just going to go ahead and continue with them and maybe come back to it for future Ben to solve. So now with the rest of the level 2 questions, we are dealing with different scenarios. So our volume is going to change, our price is going to change, the cost inflation is going to change, as well as a few other numbers. So I'm going to start adding that into this sheet now, and then earlier I said that an easier way to do this would probably be to add a drop-down menu and then use that drop-down menu to change the numbers accordingly. I'm going to enter these in manually, which I probably would not recommend if I was an actual financial modeler. Now you notice I'm going in also adding in base to these assumptions. And that's because I'm going to use that to come back whenever I inevitably screw up a lot of things on this worksheet. Now, one other thing to take into consideration with these scenarios is that the cash balance that I have, the average cash balance that I have, is actually going to bring in interest income. That was not the case for the base scenario. So I'm going to have to add this to my working papers to calculate the interest from the cash. Now what's happening here is that when I add this in, this starts to create a circular reference, which was interesting because when I was solving the case before, that did not quite happen at this point. So what I can easily do is I can turn on iterative calculations, which means circular references are fine and I can continue with them. Now I'm going to go back and try to start answering the questions. And once again, that number does not match. Now, for those of you with very keen eyes, you probably would have noticed that I hadn't actually figured out the growth case yet. I haven't put those numbers into the assumption sheet. So very little from my worksheet has actually changed. You can tell at this part of the case I'm starting to get a bit exhausted or fatigued because I'm really starting to have trouble with some of the simplest questions at this point. Or maybe they're not simple, just some of the later questions. So here we go. I'm going to go ahead and start in adding the growth scenario figures to my assumption sheet. Now I get a cash figure. I'm going to put that in, and that's going to match one of my answers. Now we get to the last two questions, and the last two questions were not multiple choice, but rather I had to fill in the actual answer. So these are going to be much more challenging. I'm not going to know if I'm actually close or not. Now what's interesting is that as I'm adding rows, the labels aren't changing because I brought the labels in as a range. So what I need to figure out is withdrawals, or really they should be called drawdowns, to see how much money I'm bringing out to bring the cash balance back to a positive or at least a zero value. Now I'm trying to see if there's like a formulaic way that I can do this. The problem is as I add in withdrawals, that's going to change the rest of my statements here, and that's going to change the actual amount of cash that I need to withdraw. So when we look down, we see we have a negative balance of 5.7. So I need to make sure that I add this revolver into the statement of cash flows as well. So I'm going to add a line for that, just like I did for the other loans. So I'm going to put the withdrawals and the payments together into a single line. Withdrawals are going to be positive numbers because we're bringing cash in. Repayments are going to be negative numbers because we're paying cash back out. Now I'm going to try a goal seek here to see if I can set this cash value to 0 by changing how much cash I'm going to withdraw on that date. Now, interestingly enough, I'm not getting a match. So instead, I'm just going to go ahead and try this manually and see what comes out. So I see if I hit 5.8 million, then that brings my cash down to 0. I need to update this formula so that it includes withdrawals into the balance. And when I pay back 5.8 in the following year, oh, now my cash is at negative 0.1 again for that year. So I need to change that back. Now we're back down to 0. Pay that amount back in 2027. And now everything seems to be coming out okay. What's happened here? So you see, when I created my growth and worse volume growth scenarios, I created them as formulas. And so what that did was when I included my growth figure, that actually changed what the worst figure should have been. So that's really affecting the numbers on the sheet a lot. Now you can see that the amount of cash that I need to withdraw is much, much higher. So I'm going to add in that new amount in. We're still at negative $1 million. So I'm just going to continue doing this until we get that number up to 0. I see we withdrew about $96.8 million. That takes our numbers up to 0. Next year I've got much more than enough to pay that back, so I'm going to pay that entire amount back. And now our numbers do seem to add up. So the most that I had to draw down was 96.8. That checks out. Closing cash balance at the end of 2029 with that amount taken out, 643.4. When I put that answer in, rounding it to 1 digit, that's going to check out as well. That was a challenge, but of course this is supposed to be a challenge. This is the hardest of the 3 cases of the first stage of the Financial Modeling World Cup. I, as I mentioned multiple times, am not a financial modeler, so this is going to be extra challenging for me, but I still enjoyed taking this to its completion. Now, I never figured out what was wrong with the checks. I never actually needed it for these questions. Maybe later I'll figure it out. If I do, I'll mention it in the comments. If you figured it out, you can mention it in the comments as well. But if you're still here, thanks for sticking with me throughout the entire video. I really do appreciate it. Do be sure to give me a like, maybe even subscribe, and I hope to see you for the next one.
It's the Excel.